Hello and welcome to the channel Market Chat Pattern. Today is 7th of January 2024 and I hope everyone is having a great weekend. In this video we are going to mainly focus on the key US stock indices that we follow, and I would keep the video brief in the sense that I'm not going to go and discuss the pattern formations. I will mainly give out the standard deviation levels for the week and also for the day, which is being the Monday, the first trading day. And there is something I would like to focus on, which we will discuss more in detail. And as usual, this video is for educational purposes only and it's not a financial advice. So generally speaking, what I think is that the market is trying to form at least some sort of a bounce, perhaps sometime next week. Last Friday there was an attempt for a rally. Some of the indices did close in the positive, so that's good. However, I do not think that perhaps next week is going to be a meaningful low in place. I do think we will have a good bounce perhaps that might come in, and the reason for that I will just discuss that a little bit later on. I have been working on something from a timing perspective. Now time is elusive and it is approximate. We'll have to wait and see if the attempt I'm doing is something meaningful or not. And as usual, this video is for educational purposes only and it is not a financial advice. So just a really quick thing about the S&P 500, the cash index. It has not made an all-time new high, but in the ES E-mini futures contract it did. So here we go. That's the ES E-mini futures contract, and just to give you guys the standard deviation levels, which I will also put in the description. These are the levels that we are looking at. The top part is the weekly, so you can see the weekly close because last Friday was the end of the week, trading week, and it was also the Friday, so we also had the same closing for the indices and also for the VIX. This is the VIX index. So the way these tables work is that through my calculations, I work out the standard deviation levels based on the points or the range the stock indices could move for the week, and also it could be applied for the day as well. And then we just add these to the mean, or in other words the last close, and we add one time, we get the +1 standard deviation. We add it 2 times, we get the 2 standard deviations, and then if we minus it, then we get a -1 standard deviation, -2 standard deviation, and same thing for the daily ranges as well. Now I will do another video in which we will discuss how actually I'm trying to calculate this. Some other people who might be actually also working out their standard deviation levels, their results and my results might differ a little bit, not by a huge margin, and that's just because of the data. They might be using a different data, maybe using it from their options broker platform, something different to the way I'm doing, but approximately we will still be in a pretty close range in my opinion. So this is the weekly chart of the S&P 500 E-mini futures, and what we see is the levels from last week. And here we go, the -1 standard deviation. So the market actually closed a little bit above it, and it just hovered around this level. It just went a little bit lower, and finally for the week closed above it. But nonetheless, that's where the market came down to. So we'll just quickly update this, the +1 and -1 standard deviation. I will actually put these in our description, so you'll have it as well. So the +1 standard deviation is for next week 4822 spot 34, and on the minus side we are looking at 4647 and a quarter. So this is for the S&P 500. For the NQs, there we go. Okay, so for the Qs, there is still a possibility, maybe we still get to 1725. The Qs have been much weaker, and what we see is that actually the market actually went lower than the -2 standard deviation. Again, the ranges that we were expecting, and actually closed above it. on a closing basis. So that's what we were kind of expecting to happen. Here the +1 standard deviation is 1, 6, 7, 6, 4, and 75. And on the minus side we have 1, 6, 1, 5, 5, 75. And on -2 standard deviation we have 1, 5, 8, 5, 1. Okay, and next week and also throughout the week we'll also evaluate how these markets are actually, you know, respecting these ranges. Again, this is the Dow E-mini futures, and here again this big ABCD pattern formation, just Dow just there, and hasn't done much to be honest last week. Plus it is the strongest of all the indices that we are watching. On the plus side we are looking at 3, 8, 4, 1, 6, and on the -1 standard deviation we are looking at 3, 7, 0, 2, 1. And finally the Russell 2000. There we go. This one had a big pull back. You can see it's coming back into the range on the standard deviation levels. You know, it just closed slightly below the -2 standard deviation, but it had been hovering around this level for quite some time past week. And here we have +1 standard deviation being 1986, and the -1 standard deviation is 1914, and -2 standard deviation is 1878. Here we go. Now what I'm going to do is actually move on to the Dow Jones Industrial Average, but cash chart. So I'm just gonna move to the, here we go, this is the daily chart of Dow Jones Industrial Average, and this is the cash index, and you will see that this chart is pretty looks pretty busy. And what I was trying to do was I was trying to come up with some timing model, or some where I could find perhaps some sort of a rhythm in this marketplace, where we could identify there is some sort of a cycle on the timing basis. As you're already aware, on the price axis, we like to use the one-to-one price projection ABCD. That has delivered remarkable results. The long-term subscribers of the channel will know on several occasions in different markets we have seen those price projections work rather really well. And I was trying to find from a timing perspective if I could find something which is also working on the timing, on the time axis. Now time is elusive, and sometimes some things are working, and I find that perhaps there is a cycle, and sometimes that cycle is actually contracting, and at times it is even expanding as well, and it could expand by a Fibonacci ratio, or it could just be expanding by 50%, and likewise for the contraction as well. So things change as the markets move from one cycle to another cycle, one phase of the cycle to another phase of the cycle, where they could contract and they could even expand as well. So what we are looking at is basically what you see here, different arrows in different colors. So the blue ones, these are where I've tried to find the times from low to low. So I'm comparing a low to low, and this is where I've found it to be the most consistent. And then I also have high to low and low to low as well, which are in a green color, and high to low is in the red color. Just going back to the low to low, and what I found is that we have something which is working in approximation of about 53 to 55 bars, which is trading days essentially. So if I compare this low to this low, I get about 53 bars. If I compare this low to this low, I get about 23 bars, which is pretty much half of 50, so a little bit less in this case. And then this low to this low, this one to this one is 22 bars, and if I take this low to this low, then it is 56 bars, which is pretty close to this one. And on few occasions it has actually expanded as well. So if we take this low to this low, it is 79 bars, so it expanded by about 1.5 times of this 53 figure, for example. and something similar around here, this low to this low, and I took this double low here, about 81 bars. So it looks like there is something there in this phase in particular. We had this something around the 53, 54, 55 trading days. This is how a low cycle was working in this phase where the market had been declining in the year 2022. So since October 2023, the phase has changed a little bit where the markets have actually been moving higher. And here, let's see if this was working as well. So I took this low to this low, I get about 49 bars of trading days. This low to this low, 55 bars, again very close. And this low to this low, and I get 54. And from this low to this low, 59 bars. This low to this low, about 45 bars. This and here, let me just bring it down here. And what I am looking at is based on this, that perhaps we could use this data and try to extend it into the future to see if it is working the way we think it is working. Where could we get a potential low come in the market? And this is why I think that next week is probably going to be a good bounce, and the following week we could see a perhaps a good low come in. And the reason is that, when I took the harmonic mean of these numbers, adjusting for the weighted average of these two, where it expanded by approximately 1.5 times, then I get something in the region of 54 to 55 trading days as the harmonic mean. And if we just try to use that information and try to project it from this low, then we get somewhere around 17th of January 2024 as a date where potentially the low could come in. Now these things are approximate. These are never going to be 100% that something will happen on this particular day. It could be off by a few days on either side. So it would come in a few days early. It could also happen let's say a couple of trading days afterwards. So these things adjust, so it's never going to be perfect. And the model that I'm trying to work with, this can change as well as cycles expand and contract, but based on this, just something I'm throwing out, that perhaps in the region of about 16th, 17th, 18th of January, that week we might be actually looking at some sort of a low coming in the Dow Jones Industrial Index. I haven't done other indices. Other indices might have something different cycle. I chose Dow because Dow, it's the industrial average, but it's no longer just a composition of those industrial stocks, going back, I don't know, since 1920s. So the composition has changed, but we have a lot of data for this market, and some of these things have, per my study, worked really well in this index. I would like to use Dow Jones as the index to be used. So this is just throwing out just this. We'll have to wait and see whether it's going to work or not. The other things that I also looked at, I looked at high to lows. So we get about 16 trading bars. Then high to low of this one, we get about 35 bars. So almost double of this. And then we also have these ABCD price projections here, these brown lines. So looked at some of these as well. These are, let's say, the inner ones. So here I get a high to low of about 37 bars. This one was 15 bars, again very quickly from high to low here. Again, I believe it was in the phase of the cycle where the price just moved down really quickly. And this is about 56 bars, which is about 1.5 times of this 35 bars, which was about 2 times the 16 bars which we have seen here. Again, a high to low of 32 bars. And then what we also have is several of these, but I did not find them to be that consistent compared to a low to low. So that's what I've used. Then I've also done something a little bit different, and I'm just going to show you what I did. So basically what I did is I've done some Fibonacci price extensions on the time axis. Normally we are looking at these on the price axis. On the time, again, the time is more elusive. So what I did is I took a low to a low here, and I projected it from this high. So it's very similar to the method that we use for the price projection, but that one we are using on the price axis. So normally we would do something like this: A, B, project this from point C. Here what I did is I took A, B on the time axis, projected it from this high as point C, and what we are looking at is just by observing some of these expansions and internal retracements. Then I see an internal retracement come in around 30th of October, 31st of October, and that's very close to the low, and it was a 0.618 internal retracement. And then the 100% is where pretty much where we have seen the top come in around 28th of December 2023, and what it is projecting is the 1.38 expansion around 27th of February 2024. So what it could perhaps mean is that that we could perhaps see some sort of a meaningful top come in around the end of February, beginning of March, because just what I'm anticipating is it's just on purely speculative that perhaps we might see some sort of a low come in for the following week, not the next week but the week after, based on what we are looking at some of these timing low to low cycles. And perhaps the markets actually begin to rally, and the S&P 500, the cash index, actually makes another new all-time high, because it hasn't done that, but on the futures it did. And perhaps markets begin to rally towards the end of February, beginning of March, and put in a high. And then what we could see is just extrapolating and reading my thoughts out. And then that's where we could see a meaningful top come in, and then some sort of a bottom coming in around early April 2024. And yeah, so we'll have to wait and see whether what we're looking at is actually going to yield us the results the way we are anticipating this. And if it is, then it's going to be really beneficial for us, because it appears that we might have a blueprint for some sort of a roadmap which we could extend into the future, and actually see if the market is actually following the rhythm of what we are looking at. And that could give us really good points where for the market turns, and market timing is a pretty difficult thing to do. But if we have a good roadmap with the price action and the pattern formations that we pay attention to, as the standard deviation levels that we are looking at, if we can put everything together, we could have a pretty good model. Just to roughly something very rough out, what I did was I took a high to high, this high and this high in orange. And if I just, I don't know where the actual high will come in, but if we were to put it, let's say, just for the sake of argument for now, if to this high, then it extends to somewhere in end of August, where we could see, some sort of, how to put it, maybe we could see some sort of a nice rally where it could begin from, assuming there's some kind of a low. But we'll have to wait and see. We'll have to see how this thing will evaluate. But I spent some time going through this, and I thought it's something interesting, and I wanted to put it out to you guys. And then what we can do is on a weekly basis, we can actually follow this and see how this, whether it's giving us some sort of a roadmap, whether the market is dancing to the tunes of what we are thinking. Might be sort of a good roadmap for us. Whether it will actually happen or not, we'll have to wait and see. So just wanted to discuss this with you guys. Let me know your thoughts in comments, what you think about this, and we'll take it from there. So thank you very much for watching the video. I wish you good luck and good trading, and a happy and great weekend.